Good morning, good morning. So today is Sunday, October 11th. This is Greg Bridges with Trading the Pips. I decided to go ahead and pull up a website for Ashford Hospitality Trust. I own about 106 shares of their stock. And just quick thing about this particular stock. They own quite a bit of hotels. I want to say over 100 plus hotels in different areas all over the United States, anywhere from a few Marriott's, W's, Hilton's. They own, I want to say, some Ritz-Carltons in Atlanta. They own quite a few, but this is their website, as you can see, ahtreit.com. They're a REIT, right? So we just scroll down just to see, Ashford Hospitality Trust, and to tell you they are, what they focus in, and then their recent news, so on and so forth, what they're planning on doing with in the future with their stocks, that they're planning on adding actually some more stock, like another public offering. And what we'll do is we'll click on the portfolio. So I actually can show you guys some of the hotels they're invested in and that they actually own. And we'll scroll down. And you see Fort Worth, they own the Ashton, D.C. It's a Churchill, Courtyard in Alpharetta. I want to say that's Georgia. Courtyard, Basking Ridge, a couple of courtyards. They own, let's see, Crown Plaza, Key West, Embassy Suites, different places, Houston, Philadelphia, Embassy Suites. They own Fairfield and Kennesaw. That may be even Georgia. Beaufort definitely is Georgia. Lawrenceville, definitely Georgia. They own some Hiltons, or they're invested in Hiltons. Hilton Garden Inns, so Hyatt's, they're all over the place, right? So like I told you before, they have some Marriott's, they have some W hotels. We'll scroll down just to see. They own some Ritz-Carltons, see right there, Ritz-Carlton Atlanta, some Sheratons. So they're invested in quite a bit of stuff, W Atlanta. So they're invested in quite a bit of stuff. So if you don't know about the hospitality industry, hotel industry, pretty much what happened is COVID hit, and it pretty much shut the hospitality industry almost down, in the sense that a lot of people weren't really getting out anymore, and actually staying in the hotels for their cruises or their vacations or whatever it is that they were trying to do, go visit family and stuff. They pretty much just stayed at home and stopped really going out. So some of these hotels had to actually shut down either all the way or shut down partially, right? So they closed down some of the floors, and they had to make sure that they were abiding to some of the guidelines for COVID, so that guests weren't going to be getting sick, and they had to make sure that things were cleaned better, so on and so forth. And at the same time, they cut their staff down so that they could save on expenses. So as you look at this Ashford Hospitality Trust, this REIT, you pretty much see that most of these hotels, even though they are upscale, that they actually did have to cut back. So they're losing quite a bit of money doing this COVID-19 thing, right? So they've lost a lot of money in terms of the value of their share price value of their stock, right? So what we'll do is we'll go over here and we'll click on investor. And I always tell you guys, man, when you're looking at stocks, always go to the actual company's online page and go ahead and pull up their investor relations tab so that you can find out whatever information that you need. Don't go by these third-party websites and tells you all this information, and the information may not be true. So if you go to the actual company's websites, you can go to investors relations tab, and it'll tell you everything, because they have to be forthcoming with all the information, right? So New York Stock Exchange has AHT for $1.56. As you see, Robinhood has it for $1.62. So it's a possibility that it changed a little bit in that time frame. And actually, it shows you that it changed by 8 cents, right? So it did go up after hours. And It shows you the recent press releases, the approval of the stock issuance. So they're going to be giving more stock. I think I talked about that a little earlier. So you see latest earnings releases, the latest webcast, latest investors presentation. They have an interactive analyst center, so on and so forth. They give you all their information. As you can see, the contact information if you want to talk to somebody, transfer agents, everything, right? And then they show you to their websites, copyright, contact info, so on and so forth, right? So you can always come up onto this website, take a look at what's going on with them. And like I said, they have news, they got stock, showing you the historic prices, their dividends, they're covering analysts, but basically you can just come to this site to get anything, even the SEC filings, because anytime they do something, they have to file with the SEC and put that information out there to the public. So what we're going to do is pretty much jump off their page, and we're going to go over to AHT as its stock, right? This is my Robinhood account, and we'll scroll down and you can see it's 162 right now, and it says my average cost is $3.13. So most people would say, oh man, you're in kind of high. And the answer to that question is yes, I'm in high, but we're talking about something that did a reverse split. This was a 60 something cent stock at some point, that did a reverse split that went up to $6 and some change. And the reason why it was so low at that time was because of COVID, right? So it went from being $6 and some change to 60 some cent. I got in, I want to say with 300 or 400 shares, and then they did a reverse split, which pushed their price back up to $6 and some change, but cut down the amount of shares that I had, right? So it cut down my amount of shares to, I want to say 30 or 40. So what I did was, as the price continued to go down, because obviously they adjust my average cost. My average cost was like somewhere in the sixes. And as the price went down, I was able to buy another 50 something shares, giving me 106 shares, and bringing my cost from being $6 and some change to $3.13. And now as we look at the price, we see that, hey, it's down to $1.62. I want to say the low was like 130 something. And so what we plan on doing is getting ready to buy another 106 shares. So they'll put us at 212 shares, and it will change our average cost. And I want to say the average cost would maybe somewhere around the $2.60 range, maybe $2.80 range. I have to take a look at it again. We're hoping that it drops down a little bit more so we can get it lower. But that's pretty much where we could possibly get in at, a couple of cent difference, and we're on more shares. So what I would like to show people is our 1 year chart. So if you look at the 1 year chart, you'll pretty much see that these were the highs, $29, $27. This was December 2019, right? So we haven't even got to a full year yet. So going into January, it may show us we're in October now. So October last year, October 15 last year, we're $28.10. But right now we're $1.62, right? In this October for it. So almost a year later, we're $1.62 on the price. Why? Because the hotels are still going slow with their occupancy ratings, right? So let's look at what happened right around when we started hearing about COVID. As COVID started coming up, we started hearing, boom, we see the first drop. February 27th, it dropped to $20, right? So it lost about $7 in value. And as the time went in March, we watched it drop, and it's down at $4 and some change. We saw a couple of spikes where it jumped up to $13 before dropping back down between the $6 and $7 range. Fives, we saw another jump up. That was in June to $17.30 before it collapsed and started going down. And that's where it's been ever since, right? It's going down, it goes sideways a bit before going down even further, right? So now we're down to $1.62. And the only thing we really can do at this point is shore up what we have. Some people will get afraid and they'll go ahead and sell on whatever they have because it's dropped in value. I'm not one of those people. I believe in just spending a little bit more and looking for the right price, right? So if I'm able to get in right now at $1.62 or even lower, we know that we're going to change our average cost right here from $3.13 to $2 and some change, which means we're not that far away from the $1.62 range, right? So as the price goes up or goes down a little bit more, we'll be able to invest again and buy double the amount of 212, which should put us at like 224 or something like that, 424, and then we can possibly look at our new price average cost being about $1 and some change. So we're going to get closer and closer to that dollar range, and then as the price goes up, you have to think of it as at some point it's going to go back up to that $26 range. So right now, if we click on our spreadsheet, you'll see that I already have it accounted for. We already accounted for 212 shares. We got it at $2.60. It's going to be our average cost, and we're trying to sell it for $25, right? So we're not going to let it go until it hits that $25 mark, and which means that 212 shares are going to make us a total of $5,300, and our profit is going to be $47.48.80, right? So we're going to come out with quite a bit of money from only spending $551. Is 212 my final number in terms of how many shares I want to own from AHT? The answer is no. 212 is the short-term building up share cost or shares that we want, right? So we have 106. We're going to double to 212, and then obviously we want to double that to 424. And I think, and as you can see right here, still at 25, we're going to get 10.6 and then come out with 9,004. And I think we want to even off at right about 500, and actually we want our average cost to really be around the 156 range. I think I'll be satisfied right around that range. So we would have spent $780. Those shares will be worth $12,005. We sell at $25 a share, and we'll come off with 1172, right? So you really see right now what a little bit of money can do for you if you're investing in the right stocks and actually buy a good number of stocks and really just hold on to it. So right now, it's been almost a year later from October to October. If you would have bought October of last year in 2019 and held on to it, you'd have lost a ton of money. But if you're buying now where it's super low in value and you're going to hold, then we don't know what's going to happen when next year comes around. It could be back up here in the $20-some range. So, and even when you go on the company's website, and I want to say if you go see back one, and I want to say it probably was in investors. You should be able to download. Maybe it wasn't that. You should be able to download the information that talks about what they expect. So if you download the full portfolio, download that, it should tell you what to expect for the year 2021. I want to say they think they're going to be up 20 to 40%, maybe more than that for the year for 2021. So when you see that, that's when you know their prices is definitely going to jump up. So we're going to see it jump from that 162 range to the $2 or $3 range on back into the sixes. I think it's going to probably have a little bump right around, this area where we see the last bump at. So that's like $13, so I think we're going to see between $13 and $17. We're going to see some type of hesitance before it jumps up. And then when we see it jump up again, it's going to be right around that area before it jumps up into that $26 range. So I think this is a long-term hold. I'm not telling anybody to buy this stock. I want you guys to do your own research. Find out as much as you can about Ashford, what they plan on doing, how many more shares they plan on putting into the stock market. Obviously in order to kind of push off or put aside some of those the money that they're spending to keep the hotel moving, because they are definitely losing money right now. So hopefully everything turns around for them. I believe this is it's definitely a riskier type investment, but overall, I think if you have the money to set to the side and you don't necessarily are not in a position where you're going to need the money in the near future or even in the long term, a year from now, I think that $700 is quite a bit of money, at least on my end, to invest to come out with 1172 for a profit, right? So, and you're probably looking at my bottom numbers, $27,000 to $323.50 and $23,000. So basically, this is all my stock that I plan on selling all together, everything, and what I would come out with. So obviously, that numbers are going to change because I'm going to increase the number of shares and quite a few other things. But anyway, this has been my video for AHT. Hopefully you guys do some research and learn a little bit more about the company, and hopefully you guys can do some investing yourselves. All right, have a great day. Bye.